Hello, and you're welcome to Global Business Insights, where you get more on the main business headlines across the globe. Our thoughts with Iranians, a state media announced that President Ibrahim Raisi and his foreign minister were killed after their helicopter crashed on the way back from a visit to the country's northwest. In Taiwan, William Lai has taken office as president this morning as Tsai Ing-wen, who ruled the country for the past 8 years, passed on the top post in a brief ceremony at the presidential palace. Earlier today, the People's Bank of China, PBOC, held loan prime rates steady. In line with expectations, the Chinese central bank maintained the 1 year and 5 year LPR steady at 3.45% and 3.95% respectively. Still in China, the government launched an anti-dumping probe into imports of a widely used plastic from the US, EU, Taiwan, and Japan in what looks like a first salvo at retaliation against recent Biden-China tariffs. While also in the US, US stocks are set to open higher as we get this week the Federal Reserve's May meeting minutes, existing home sales and other real estate data, as well as purchasing managers' numbers. Late Sunday, that was yesterday, US futures showed Dow Jones Industrial Average futures, S&P 500 and Nasdaq Composite futures all also in positive territory. The Dow closed on Friday over the 40,000 mark. And in Nigeria, the Monetary Policy Committee has kicked off its 2-day meeting to decide on monetary parameters, and we will be previewing what to expect. Still in Africa, this week, Kenya's President Ruto is at Washington, hosted by President Biden at a state visit. As the 295th meeting of the Monetary Policy Committee of the Nigerian Central Bank holds today and tomorrow, the expectation is that given still rising inflation, we could get yet another rate hike, albeit milder, or the same 200 basis points hike, which took rates to a fresh record high of 24.75% on March 26. That followed a 400 basis points increase in the previous meeting, which was the biggest rise in borrowing costs that we've seen in 17 years, which also could be understandable as the MPC then had not met for several months. High interest rates have been weighing on economic growth, holding back the economic takeoff required to get the $1 trillion economy that the government is targeting by 2030. The Stanbic IBTC S&P Nigeria PMIs came in at 51.1 in April 2024, little changed from 51 in the previous month. The reading pointed to a fifth consecutive monthly improvement in business conditions in the Nigerian private sector, but improvement that was only slight overall. According to the latest IBTC S&P report, inflationary pressures remain at record high, suggesting limited headroom for private sector activity to improve substantially. The latest Nigerian inflation did show that on a monthly basis, consumer prices rose by 2.29%, that's month on month, in April, easing from a 3.02% surge in the previous month. But the headline year-on-year inflation climbed to 33.69% in April, its highest since March 1996, up from 33.2% the previous month. Some analysts have warned that hiking further could be costly for economic growth and will do little for exchange rate stability, especially without a strategy to significantly boost forex availability. The good news has to be that confidence is on the rise. Investors and major players like Emirates are returning to Nigeria. The World Bank, at its latest IMF spring meetings, appeared impressed that Nigeria is on the right transformation path. Ahead of the meeting, Ayo Teriba, one of Nigeria's foremost economists, warned that the Central Bank of Nigeria cannot address volatility in the foreign exchange market, which is resulting in an unstable exchange rate and price stability, by using extreme measures like hiking the monetary policy rates. These measures, according to him, will produce temporary respite if done without a strategy to significantly improve foreign reserve adequacy. Others warn that the urgency with which the president is trying to achieve appreciation of the naira against the dollar is resulting in unsustainable methods. Teriba also advocated for an asset-centric strategy where we offer our real estate, infrastructure, and corporate assets to raise equity at home and abroad, noting that there is equity issuance headroom, especially as Nigerian state-owned behemoths are not listed on any stock market. He also warns that monetary policy is ineffective in breaking the inflationary loop when exchange rate volatility and capital mobility are not controlled. There were noises of privatization of some state organizations like NMPC, but of late there is silence on the calendar on privatization, and the new narrative seems to be that NMPC is doing well as is and privatization can take a back seat. Nobody says that productivity most likely is lower than it would have been if it had been in private hands, and cost of doing business also probably higher, as many foreign partners quietly exit while a culture of patronage is protected. Not saying that this is also the antithesis of inclusiveness, efficiency, and transparency. The MPC, the Monetary Policy Committee, can celebrate a falling month-on-month inflation and some progress in stabilizing the naira, but are advised to be gentle on the rate hike pedal, rather advising government to privatize and working more in concert with the rest of government to attract significant domestic and foreign equity investments into government-owned enterprises. On Thursday, 23rd of May, Kenya President Ruto will be hosted by Biden at a state visit, which also marks the 60th anniversary of US-Kenya diplomatic relations. Since he became president in 2022, Ruto has built up his profile through his hosting the inaugural Africa Climate Summit last year and has made numerous high-profile trips, including a visit to China in October last year. Kenya is an economic powerhouse in the more integrated East African region, but this is also a region with a very strong Chinese investment penetration. Back home, the economy has seen some decent growth. GDP was up by 5.9% year-on-year in the third quarter 2023, accelerating from a marginally revised 5.5% rise in the previous period. It also marked the strongest economic expansion since the first quarter of 2022. All this primarily supported by the agricultural sector. Inflation fell for the third month to 5% in April 2024, the softest since October 2020, and down from 5.7% a month earlier and from a peak of 9.6% in October 2022. Ruto's US state visit comes under a cloud of discontent over proposed tax hikes and the cost of living, as well as alleged government corruption and handling of recent floods, which killed over 160 people. Like I said, Kenya is a foothold for China into the East African region, with trade balance skewing heavily in China's favor. From 2015 to 2019, the total trade value between China and Kenya was about $18.2 billion. Of this, Kenya's imports from China made up 97%, while Kenya's exports to China were a mere 3%. Trade with the US is far less in terms of volumes. In 2023, US had a goods trade deficit with key US exports, including petroleum products, chemicals, equipment, totaling just $443 million, while imports from Kenya reached as high as $895 million. Good for Kenya. Already, Kenya last year finalized a new trade agreement to expedite the strategic trade and investment partnership, which will enhance trade and investments between the two countries. It is unclear, however, how this trip will do more than open a few more investment flows into Kenya, and if China's grip on the region can be dented by this visit. Winning in Africa requires a long-term view, sympathetic to its peculiarities, which is why I suspect the Chinese tend to do so much better. But there is some good news. The AGOA Africa Growth Opportunity Act, Renewal and Improvement Act of 2024 extends now to 16 years, pushing the program's expiration from 2025 to 2041. This long-term extension would provide businesses the certainty needed to invest in sub-Saharan Africa, supporting economic growth and development in the region. Africa has to be better at ability to do business with both warring blocs, that is China and the US, and Kenya is a test case on how this is being managed. The Chinese Commerce Ministry announced today that the country prohibits General Atomics aeronautical systems of the US from engaging in import and export activities related to China. Yesterday, China signaled a first retaliation salvo against trade barriers introduced by the US and the EU as it launched an anti-dumping probe into imports of polyoxymethylene copolymer, which is a thermoplastic imported from the European Union, United States, Japan, and Taiwan, which are strategic and can partially replace metals such as copper and zinc with various applications, including in auto parts, medical equipment, and so on. The investigation should be completed in a year, but it may even be extended further for another 6 months. The European Commission, which oversees EU trade policy, are carefully observing these investigations before deciding on any next steps at a meeting that will take place next month. While this is a measured response from China, it's also symbolic in that the Chinese are showing the capacity to use extensive administrative barriers to slow down imports of strategic materials coming from the West without provoking a strong EU response. The Federal Reserve and 2 other US regulators are reported to be moving toward a new plan to significantly reduce a nearly 20% mandated increase in capital for the country's biggest banks, following lobbying efforts by industry CEOs like JP Morgan Chase's Jamie Dimon. The Federal Reserve, the Federal Deposit Insurance Corporation, and the Office of the Comptroller of the Currency are still discussing substantive and technical revisions, and there is no guarantee that an agreement will be reached. Higher capital improves cushions to absorb shocks which could hit the balance sheet, including challenges in some sectors given the tepid economy. Also, more capital reduces the likelihood of banking crisis and provides more credit to the real economy. It will tend to result in a more cautious risk management to prevent credit losses, and of course, capital acts as a buffer against financial distress. But of course, raising capital can also come at a cost to many of the larger banks and their shareholders. Asia Pacific markets are mostly higher, tracking Wall Street gains. This is as China held its loan prime rates unchanged and after announcing measures on Friday to boost its property market. We also will get inflation and business activity data from Japan later this week, while Singapore will also release April inflation numbers and final figures for its Q1 GDP performance. Pretty green day for Asian stocks. Well, that's it from me on Global Business Insights. This is Bode Oshosami. Please share, kindly follow on Facebook and LinkedIn, subscribe on YouTube and X. Thank you very much for watching and following. Bye-bye.